Good morning, everybody. Good morning. Welcome to Thursday, September the 5th. Man, the week is almost done. When you have a holiday, it goes quick, doesn't it? Today's quote: do not give the devil a foothold. Don't give the devil a stronghold. Don't give the devil an opportunity. Just say, not today, devil. And guard your mind. Guard your mind, because he's on the prowl. He's looking. He's waiting for you to screw up so he can call you a big fat dummy again. Don't let him do it. Say, no thank you, not today. Know who you are, have confidence in yourself, and be the best trader possible. So let's get into it. Welcome to the AM briefing number 254, where together we trade better. If you're looking for a futures trading group that focuses primarily on the ES and MES futures contract, check us out at microstrader.com. We do have traders who trade NQ exclusively, who uses what I say to help them in their NQ trading as well. But I do focus primarily on the ES with indice confluence to help improve our win rate, in all honesty. So tip of the day today: personality of price action is something we talk about in our group. Do you like the personality of this price action? Does it match your trading style? Yesterday was a day after a big move. So I warned the group, hey, remember, day after a big move, price is usually characterized by low quality, disgusting chop. At the end of the day, I use the word wishy-washy. Sometimes I make the little reference that trading the chart is a lot like dating, in the sense of, is the person you're dating, do you like them? And sometimes you don't. Sometimes you don't get along and you just go, this isn't the one, and you move on to the next person that you're going to date. Same thing with trading. You don't like the personality of this price action, just move on. Yesterday was certainly characterized by lack of follow through, but we did get one miniature short covering rally, which we will talk about. Remember, below there's timestamps, there's a chart, and there's a place where my eyeballs are. Congratulations to Ron yesterday. He earned a badge. Another trader earned a badge a few days ago. So make sure, if you're new to my group, you certainly earn those badges. And if you wouldn't mind, it costs you nothing to like, share, and comment. News drivers. Well, today's the day before non-farm payroll. This is certainly a level 10 trading day historically. All the eyeballs are on tomorrow. Be a good sniper. Be a good surfer and wait for your shot. Wait for your wave. And you might have to wait all day. Or you might just be patient, is what I'm going at after there, and dial it down. Okay, next week's CPI, the next week's FOMC, and possible imprisonment of a president. So dial it down. And if you can't dial it down, the great economist Clubber Lane has a prediction for you.
Prediction?
Yes, prediction.
Pain.
All right. So today's not Friday, but I would certainly move into Friday rules. Shortened weeks are typically harder weeks to trade. If you're up nicely, please do not give your week back. Maybe trade with a smaller daily stop loss. Maybe take one loss and you're done. Maybe just trade one little micro for the next 2 days. It's okay. Or take a percentage of your weekly profit and say, I'm only going to gamble 10% of that or 20% of that. And I use the word gamble on purpose, because the Thursday and Friday of non-farm payroll is definitely not the easiest trading conditions. Go into the weekend a winner. There's 2 Fridays every month I encourage you not to trade. That's non-farm payroll Friday and OPEX Fridays, okay? And tomorrow is non-farm payroll. So let's get on the chart. So yesterday, in the AM briefing, I gave you these levels along with my chart, that my eyeballs were on this 54.87. That's really where I wanted price to go, but not even close. And then this 52 is the next place my eyeballs were focused on. And I gave this little, that if we do this, I want to be long for this move. And that is what we got. That's where I made my money yesterday. I made 15 points yesterday. And that's what we got here. We got this move here. Did it follow through? No, it didn't. You know it's not going to follow through. It's the day after a big move. I think if they were going to take this thing all the way back, the overnight session would have stacked going this way, like we did last week, where one of my traders, he got in the overnight, went to bed, and woke up, and he's up almost 50 points. This is not what happened here. I was hoping this would happen here because I was trying to be long off this 55.10 level, which just danced beautifully all night long, but it wasn't meant to be. So that's how we traded yesterday. We were long in here. When it broke this, that's about when our trading time quit, and it is what it is. We went back up and retested this level here. I would make sure that's on your chart. If you're in my group, you already have it as a strong level, but I would put that 52 level back on your chart. To me, that is still the line where I would be very careful, where the risk of short covering is high. I was hoping it made it all the way up to my next strong range, but lack of follow through, wishy-washy price action. Now, where are we? Let's bunch this thing in. Let's go into a 10-minute chart. Let's pull this thing in. Let me get rid of these strong levels. They don't need to be here. So previously we'd shot up and we'd done this 10-day consolidation, and now we're back to here. We haven't fully retraced all of that, and that's the 87 that my eyeballs are on. And so now we're just hovering here. We're building this out. We're now 1, 2, 3, 4, 5 sessions of lower distribution hanging out. The bears aren't able to push it any further down, but the bulls aren't able to get it up. And today and tomorrow are red folder days. Lots of red folders today. And tomorrow's non-farm payroll. We're not going to stay here. Which way are we going? I don't know. I would still like to see us push down to that 87, and then let's go back up and let's go make an all-time high for the presidential election. Why not? That's what I envision happening. I'm not predicting price, but I do have to look where price is attracted to go based off the high time frame levels. And that's really what the strong levels are if you're in my group. So we're just still slopping and chopping right down here at the bottom. Now, if you look at this, go, okay, maybe it looks like the sessions are stacking this way. Well, once again, I would use that 52 level. That's kind of my line in the sand that we are long above there, especially if we can get above this. Now, let me turn on my, so that's last week's low. Look where it got rejected. Boom, like to near perfection, to near perfection. If you were long multiple contracts, where's the ideal place to peel something off? At a high time frame level, and then you try to manage it from there, and sometimes it just does a little pullback and continues its journey. But 80 to 90% of the days, it comes right back into range. And where did we finish? It took out the low, and it came right back to POC. That's the chop day recipe, and it did it beautifully. So let's go take a peek at everybody else. Where is everybody else? Well, we are all in the lower distribution. We're all right at our VWAPs, basically. 3 of us are, actually it looks like all of us are above it. Easiest way for me to tell that is I turn this on, and if we're all green, we're all above our VWAP, so we are all green. So let's go ahead and look at our bull bear. Overnight trend line. I guess I would have to draw this. I'm going to give that to the bulls. Session stacking. I got to, the bears aren't able to push it any further down. I've got to give this to the bulls at this time. Yesterday, the bears won. So this is looking interesting. VWAP on the ES at this very moment. Of course, this could change quickly. The VWAP goes to the bulls. Overnight halfback goes to the bulls. Yesterday's range, we're in the bottom distribution. We can see that here. We've got this, and we're just down here in the bottom. So you'll want to make sure you have marked off your halfback, which is the overnight high. Isn't that interesting? The halfback right here is the overnight high, which is the London high, which is the RTH halfback. So overnight high plus RTH halfback. Make sure that is on your chart. So if there's two levels to have on your chart, it's this going to be this 40 and then this 52. This would be the first confirmation. Okay, looks like the bulls are winning. Let's go, let's go, let's go. So yesterday's range though, we're in the lower distribution, so I have to give that to the bears. So let's go here. Wrong one. The bears. Indices. Let's go take a peek at the indices again. Where is everybody? Everybody's in the lower distribution. So I've got to give that also to the bears. Indices. Here we go. Thank you. And the bull bear line, you know what? I've got to make that the halfback, or I got to make that 52. So at this time, I got to give that to the bulls. And the risk of short covering is high. The bears aren't able to take it down anymore. They barely, this RTH low here, they barely got in the RTH. They tried a little push again here and failed, pushed up. So yeah, I've got to give this to the bulls again on that. So at this point, I am leaning towards, it seems to me the bulls are in control, but I also know, caveat, that several of those things could switch at any moment easily. We're just in chop at the bottom of the range. Use the 40, use the 52, and I wish you good luck trading. I can't wait to see my traders live.
Stay green, my friends, and to learn more about our group, go to microstrader.com.